Hey, what's up you guys? Welcome back. So as promised, here's a video talk about 5 different stocks that I think are interesting, potentially interesting, and for you to add to your watch list at these price points at the moment. So as always, disclaimer, this is not financial advice. This is not a recommendation for you to buy these stocks. So don't sue me if these stocks continue to go down and you bought them, because that's certainly a possibility, right? So this is just my opinion. Now, props to you though if you still have cash, because I'm all dipped out at the moment, right? So I bought the dip and then it just kept on dipping and then it just kept on dipping, right? So every time I buy the dip, it goes down further and I'm all out of cash and I'm going to have to wait for my next few paychecks before I can continue to buy the dip. But in my opinion, I do think that these stocks are at interesting valuations at the moment. But anyways, before I talk about these stocks though, I do want to spend some time talking about kind of the macro geopolitical scene and the reasons why the stock market is crashing at the moment. Now, if you don't want to hear about all of this, I'll put timestamps down below. I'll put the YouTube chapters thing so that you can skip right to the list if you want. But I do recommend you watch this first section just so that you can wrap your head around the entire situation and why stocks are crashing in the first place. I do think that that is very important, right? So anyways, the first thing that I do want to talk about, of course, is the Russia-Ukraine crisis, right? So I know a lot of you watching are probably from Western countries, like NATO countries, so you're probably supporting Ukraine on this. I'm not going to comment on political stuff. You guys know I don't talk about politics, so I'm not going to comment on who's right and who's wrong and stuff like that. But what I will say is that this is affecting the markets a lot, right? So I know a lot of you have I've seen a lot of you on the internet, like on Reddit or Twitter or whatever, saying, oh, there's not going to be a war, like Putin's not going to invade, stuff like that. That might be true, or it might not be, right? According to Biden, the president of the US, he seems to think that Putin will invade. So we'll see, like, if this invasion actually ends up happening. But you know, regardless of this invasion actually ends up happening or not, you can't not deny that it is affecting the market a lot, right? These like potential sanctions against Russia, and this potential like just market impact of having like a huge conflict in Europe. So we're just going to continue to have to see what kind of pans out from this crisis. I don't really have anything else to add. Again, I'm not an expert on geopolitics, so you know, I can't tell you whether or not what's going to happen or if there is going to be a war. But you know, I think that once this issue resolves itself, either Russia invades or they don't, right? If they do invade, you know, hopefully it's going to be a smaller conflict, a partial invasion maybe, and then it can be like, there hopefully will be some diplomatic compromises that can be made, even if like a partial invasion does happen, or hopefully it doesn't get to that point in the first place, and we can just resolve this without violence, right? So you know, I'm always an advocate for peace, so I never support violence. So hopefully there's no war, but you know, just the threat of war is enough to send the stock markets down, right? So you know, I think that if Putin does end up invading the Ukraine, I think that, you know, as bad as that might sound, that might be like a good thing for the stock market, but because at least the uncertainty will be removed, right? But yeah, that's kind of like a dark shadow that's hanging over our heads right now. And according to the US government, we'll see a result in the next coming days, right? So probably in the next week, we'll see, because Russia's been amassing more and more troops on the border. So, and the US is saying that they will invade in the coming days, right? So less than a week from now. So by the time you watch this video, I don't know what time you're watching this in. If you're watching this far into the future, you can put down in the comments down below what happened, if we're all still here, if World War III doesn't break out. So well, just have to see. So this is certainly like a dark cloud that's hanging over the stock market right now. And without this issue being resolved, I really don't see the stock market kind of rallying again, at least in any major way. So that's the first thing. And the second thing is, of course, the Fed raising interest rates. So it's still kind of up in the air whether they're going to do 0.5 or 0.25% raise in March. What is priced in, though, is that they will do a raise for sure, right? So that's kind of been confirmed, and that's scheduled to be happening on March 15th. So, we'll have to see whether it's zero point 0.5 or 0.25. I think the market is generally kind of the consensus right now, it's going to be 0.5 instead of 0.25. So the bigger raise is kind of being priced in. But if it does end up happening being 0.25, that could actually be a really good thing for the market. And a reason for markets to rally if it's a smaller raise than expected. But just until the actual raise happens, I think that's also going to put downwards pressure on the stock market, right? Because it's an extra layer of uncertainty. So if I've learned anything about the stock market throughout the past, I don't know, 6, 7, 8 years that I've been investing, is that the stock market really hates uncertainty, right? Even if it's something that's even if it's bad news, once the bad news happens, the stock market might actually rally because the uncertainty of the bad news is worse than the bad news itself, if that makes any sense, right? So that's kind of like the second big dark cloud that's hanging over the market right now. And yeah, I think in general, people are just really fearful. So if you turn on the news, if you go on CNBC, if you go on Bloomberg, there's pretty much no good news, right? Try to find one positive article about the market these days on CNBC. There's no good news whatsoever. Everyone is selling, and I think that conversely this might be a good chance to buy, right? Because you don't want to buy when everyone is euphoric and everyone is greedy. You want to buy when there's blood on the streets, right? And there's a lot of blood in the markets right now. So yeah, if you're gonna buy, this is a great chance to not buy all at once. Of course, you want to probably dollar cost average in, right? Because you buy all at once, what could happen, right? Like with me when buying the dip, if I did it all at once, I didn't do it all at once, by the way. I did do sort of dollar cost average, but even with me, I eventually ran out of money, right? But if it would have been much worse for me if I had gone all in at once. Because let's say if I went all in at once, the first sign of a dip in January, then I would be down a lot more than I am now, right? I'm still down now, but at least it's a little bit better because I dollar cost averaged in. But yeah, anyways, so that's kind of like those the dark clouds that are hanging over us, and that's kind of the state of the market right now. But I think that bullish, macro trends are still bullish though. I think that the US economy is actually doing relatively well. And the reason why I say that is because there's huge demand from consumers everywhere, and there's labor shortages, right? So especially in those service industries and in these restaurants, grocery stores, warehouses, stuff like that, right? So I think that there's actually macro bullish trends that are happening, but it's just in the short term. We got all these short-term bad news, and we got supply chain issues as well. So yeah, I think that short term the stock market might continue to go down even more, but we'll have to see. Again, I don't try to time the market. So when stock markets are down, I buy in on I average in more heavily than I would have before. And when stock markets are soaring, you might want to consider averaging out, right? So yeah, we'll have to see. But now is definitely not a good time to sell if you're thinking of just selling your portfolio and turning everything into cash. I mean, you can. I'm not telling you what to do with your own money, but it's just I don't think that's not what I'm gonna do, right? So, anyways, let's jump into the list of stocks right now. Okay, so first stock I have on the list is, of course, PayPal. So I talked about this in my last video, and I do think that this stock is really undervalued at the moment because the revenue is still expected to grow 16% per year, right? So I know they kind of had an expectations guidance miss, but overall their earnings report was really good, but it's just because their guidance was bad, the stock just got absolutely hammered, and that's actually not normal, by the way. So I know that sometimes stocks can still go down when the expectations guidance decrease, but to go down 25% on one day, and then to go down 20% after that, it's just, that's not normal, right? Especially when their earnings is not that bad in my opinion. So this stock normally trades at a forward PE of mid 30s, and right now it's trading at a forward PE of around 25. So that's like super low in my opinion for a company like PayPal, for something that's growing revenues at like 16%, high double digits per year. So, yeah, this is a company that brings in $1 to $2 billion in EBITDA per quarter, yeah, it's pretty much at March 2020 lows. Like, think about that for a minute. March 2020. Do you remember what happened back in March 2020? Right, I was making videos too back in March 2020. You can go ahead and go back and watch those videos. So yeah, we're not like, I think, quite at those lows, but we're at like 10 or 15% above those lows. And before you know it, by the time this video comes out, by the time you watch it, it might just be at March 2020 lows, right? So I think that this stock is just being beaten down and beaten down. And at some point, it's like, what do you want, right? Do you want this stock do you think that PayPal should be worth $0, right? Like, the one of the PayPal, by the way, they own Venmo, which is why also I'm super bullish on it, because Venmo is like one of the most widely used peer-to-peer cash transfer apps in the United States. And also they're delving into crypto currencies and stuff like that as well. So I think that that's like a huge area that PayPal can really make an impact on, which is accepting crypto payments, right? So they recently launched something called crypto merchant payments, which if you're a merchant, then you can accept payments in cryptocurrency, and then you can convert it back to cash if you want, or you can just keep it in cryptocurrency. And like, the customer will pay in crypto, and if you don't want any crypto and you don't believe in it, you don't want anything to do with it, that's fine. You can convert it back to US dollars, and it happens seamlessly through PayPal's network, right? So I think that that's like something that's super valuable, that super interesting, that PayPal is doing. But yeah, that's like, in the eyes of Wall Street, that's worth like zero right now. So I think that's kind of unfair. So that's definitely a stock that I would add to my watch list at the very least. If once I get more money, I will be dollar cost averaging in. So right now, as I said, I'm all dipped out, but that's definitely like near the top of my list, right? So number two stock on the list is Tesla, of course. So this is a stock this is a company that's firing on all cylinders, no pun intended. I know they don't have cylinders, they make electric vehicles, but you get the idea. And people are always kind of confused about Tesla, right? Especially the old like value investing crowd, and I really get it because I used to be really into value investing. These days, I'm more focused on like growth and innovation investing. But I get from like the value investing standpoint that Tesla might not be like really high up on your list if you're an old school value investor, right? If you're like a follower of Buffett and like Charlie Munger and that crowd, and that's because looking at the forward PEs, it looks really scary for Tesla, right? But I think that when it comes to Tesla, you really do need to make an exception because this is what people don't get, right? It's really hard for people like analysts, like or even just retail investors more so, to predict what Tesla's revenue is going to be like far out in the future, right? I'm talking about like 5, 10 years, 20 years in the future. So if you look at Tesla, you're going to put things down, you're going to write things down that you think that are not pie in the sky ideas, that are like actual tangible stuff that you can input into a spreadsheet, right? And what do I mean by that? Well, like EVs, for example, right? Like how many EVs are they going to sell? How many, batteries are they going to make? Stuff like that, right? That stuff is obviously important, and that's part of the core business of Tesla. But what people don't understand is that there's also other areas of Tesla that they're working on that seems like they're pie in the sky, and I would make an argument that they're not, right? That Tesla's actually well positioned to tackle those things. But to analysts, they seem like pie in the sky ideas, like the thing with the robot, the thing with the AI, FSD, even FSD, which is technically part of the EV division. It's like, oh, we're going to build an autonomous taxi network. And the analysts are like, okay, I don't know what to put in my spreadsheet. I'm just going to put zero. Right, so that's why the metrics for Tesla look like it's really overvalued, because fundamentally Wall Street is still Wall Street's perception of Tesla is still that it's just a car company, right? And if it's just a car company, why would I not buy Ford or GM, which is trading at a fraction of the multiple that Tesla is, right? But yeah, they don't understand what's coming, like the S curves of innovation, right? So if you just to briefly summarize, again, we don't have time to go through the entire thing, but just to briefly summarize, the Tesla robots, if you think of the Tesla robot's potential, if they manage to master it, if they manage to do it well, then the robot can replace all minimum wage workers, right? So anything that involves being a cashier at fast food places, right? Being a store clerk, being like a warehouse person who grabs stuff and like moves boxes around, right? Those jobs that don't require like that high of like a technical skill, then it just requires like physical labor or for someone to be there. Well, then if you could replace that with a robot, then those people can be freed up to do something else, right? Then they don't have to be stuck at these like dead end, low paying jobs anymore. So I think that that's like a huge market, and that market is literally worth trillions of dollars, right? So yeah, but Wall Street doesn't know how to evaluate it. And also another thing, another comment that I wanted to make on Tesla FSD. There's a CNBC video that they published talking about Tesla FSD, and they made a lot of criticisms and arguments against Tesla's FSD. And Dave Lee on Dave Lee from Investing actually made a video on this, so I'm not gonna like go through everything he said in detail because I'll just be repeating it. But I recommend you go watch that video. But basically, what I want to say about the CNBC video is that I agree with Dave, right? So the CNBC video was basically talking about Tesla FSD, how it's flawed, how it's like kind of like a pie in the sky idea because the product is not ready, it's not like as good as a human driver. Well, part of it is like true. However, what you got to understand is that I think people set their expectations too high, right? So people get in a Tesla and put on the FSD beta and they think that it's supposed to be like level 5 autonomy already. Level 5 means that you don't have to have a driver there, right? So people think that everything's going to be perfect already. And they realize that, like this is still a beta and it's still like, not as good as a human in like some of the edge case scenarios. So therefore, like Tesla's FSD is worthless, or it's a pie in the sky idea, or whatever, right? And I think that that's a flawed argument because you're kind of like complaining that a first gen original Motorola Razr takes really bad quality photos, right? I'm not sure if that's like an accurate analogy, but I think that to me that's kind of like a similar argument, right? Like you're complaining that, let's say not even a Motorola Razr, just like the first iPhone, right? You're complaining that the first iPhone that came out ever takes really bad quality photos, and it couldn't even take video, if I remember correctly, when the iPhone first came out. So you're complaining that I just spent $600 on this new iPhone when like another cell phone would have cost $100, and I can't even take a video with it, right? So you got to take these things one step at a time, and I don't see any other company coming close to what Tesla's been able to put out in terms of full self-driving capability. So this is a flawed argument because technology isn't like binary, right? It's not one or the other. So there's a process that you need to follow to get from no autonomous driving capability to fully autonomous, and Tesla is like very close to that full part, but they're not quite there yet, right? And no one is saying, Elon Musk is not saying that FSD is fully ready at the moment and it's already like way better than a human, and it's like ready to be deployed and stuff like that. This is still in beta, and even Tesla themselves says that, hey, like FSD is great, but you need to be there and you need to pay attention to the road 100% of the time. And if you don't, then accidents can happen, right? If you use a product for what it's not designed for. So anyways, that's my rant over. I spent way too long talking about that. So sorry about that. But yeah, anyways, that's stock number 2. All right, so for stock number 3, we have Shopify. So Shopify is kind of a similar story to PayPal. They recently reported their earnings, monstrous growth, beat expectations, over 30% per year expected growth in revenue, and the stock just completely gets obliterated, right? So I guess being down because I think their margins weren't as good as people were expecting, or something like that, or their growth expectations wasn't as high. It's always kind of like the same crap, right? So it's like you beat earnings, and your earnings are great, and you're making a lot of money, and your growth rates are still super high, but your growth rates are not as ridiculously high as some people were expecting, and then your stock gets pummeled, right? So yeah, I think that this is kind of also a situation where it might be a buying opportunity. Again, make your own decisions. But this stock is back down to where it was back in April of 2020. And by the way, if you don't know what Shopify does, they're a platform where you can build online stores and websites and things like that. So a lot of websites, even by like big companies that handle like payments and stuff, or just like kind of the template, they're built using Shopify, right? All the backend systems. So for example, like Tesla.com is built using Shopify, and like a lot of entrepreneurs use Shopify to handle their like back-end payments and stuff like that. So Kylie Cosmetics, not that I'm like familiar with their products, but I've heard from people that that's like what they use. Once again, the stock is back down, as I said, to where it was in April of 2020. And if you got to think that, is this a bigger company than what it was back in April 2020, or no? And I gotta say, like, you bet it's a bigger company, right? So how many businesses have tried to digitalize and move their businesses online since the beginning of the pandemic, right? So if you just think about how, like, what Shopify's business was back then, where, if you were really into digitalization and like modernizing your website and like moving your businesses online, you might be inclined to use Shopify, but the pandemic kind of force your brick and mortar places to close down, and a lot of businesses are like, oh crap, we need to move online, right? So if you just think about like kind of the scene between like what society is like in general now compared to before the pandemic, to have a company like Shopify trade at like where it was around when the pandemic first started, I don't think that quite makes sense, right? And it just goes to show how fearful the market is right now. I'll go ahead and say this as well. I previously made a mistake on Shopify. So I actually bought into Shopify. I had like 3 or 4 shares. I had a lot of shares. So I had like 3 or 4 shares back in like 2019, I think it was. And then the pandemic hit, and then like it went down, and then it started going back up again, right? So when it started going back up, I panicked, and I was like, oh wow, the metrics and the valuations are too high. So then I sold it. So I bought it at around like 500 something or 600 Canadian dollars. And then I sold it at around like 800 something Canadian dollars, which I think is like close to where it is now, actually. So it's close to where I sold it at. So I can go ahead and actually go fix my mistake now if I buy back into Shopify at this moment. So back then, my mistake, by the way, was not recognizing the tremendous growth and business opportunity that Shopify has, because it's a platform that's just kind of like so ubiquitous in the industry that if you want to build a web store, if you want to build like any type of business online, like chances are you'll use Shopify, right? And I don't think that dominant position is going to go away anytime soon. Like as I said, expected to grow 30% per year still, which is super high, even in the tech industry, right? So stock number 4 is Meta. Formerly known as Facebook. So I was kind of bearish on their transition to the metaverse, to be honest, and things are not going that well if you look at it, but holy crap, this is getting ridiculous. Okay, so I remember that there was a crash back in 2018 on Facebook where it went down to like 140 or 130 at one point, if I recall, and then I bought in at around 160 to 170. So I ended up selling it, I think, at around 240, and this was in 2020, like right after the pandemic drop, and then it started going back up again. Now it's almost below 200 now. So it's actually lower now than where I sold it back in 2020, which is insane. So we're looking at a 17 forward PE on Meta. which is unheard of in the tech industry, and especially for a big cap mega tech like Meta. Even if you hate them, like I know a lot of people hate this company, and I get it, right? But even if you hate them and you don't believe in the metaverse and all that stuff, just their business model right now, just their business right now with social networking is a huge cash flowing machine. And you got to take emotions out of investing, I think, right? Because if you let your emotions, like, oh, I don't think that Facebook is good for society and stuff like that, if you let it like get in your way of investing, of course, like, you know, some people do like ethical investing, which I understand, right? But if you really want to look at it objectively, if your goal is really to maximize your portfolio returns, then you gotta like kind of put that stuff aside, right? And although I respect your decision if you choose not to invest in companies that you don't believe in, but don't let these things cloud your judgment, in my opinion. But yeah, anyways, it's up to you, but I'm trying to be objective here, and I do think that you know, just looking at it objectively, it's a $500 billion tech company with a great cash flow, great business model, and it's one of the most widely held stocks on Wall Street, by the way. So if you think that it's just going to keep falling and going to zero, well, then you'd be mistaken, because a lot of hedge funds already own this stock, and I don't think that they will be too happy if this stock kept on dropping too much, right? So this is, at the end of the day, numbers eventually start to matter again, right? Fundamentals eventually start to matter again, and I think that eventually, like, people are just going to be like, this is too ridiculous, I'm going to have to buy Meta stock, and I think that it's like approaching that point already. So yeah, that's just my opinion though. Anyways, that's stock number 4. So last up on the list, stock number 5 is NVDA, ticker symbol NVDA. And I feel like I repeat this story over and over again, but this is literally the exact same story. They report earnings. Earnings were fantastic, and the stock gets clobbered. Okay, so yeah, I think that, you know, this is just kind of unfair at this point, but it is what it is. The global chip supply shortage is actually getting worse instead of better, from what I'm hearing on the streets. So I might be wrong about my New Year's prediction. So if you saw that video, I said that the global chip supply shortage, wow, that was hard to say. The global chip supply shortage is gonna kind of wind down, is gonna get better by the end of the year. Yeah, it's not looking good so far. And I think that NVIDIA is in a fantastic position to kind of not take, it sounds bad when I say take advantage, but it is what it is, right? Like, take advantage of the global chip supply shortage, right? So the stock got beaten down after a great earnings report, and granted, this stock is still up significantly from where they were back in 2020, but looking at what's coming for this company, they're going to sell every single GPU that they make, right? So I've been trying, because I've been thinking of like making a GPU or building a computer with a discrete GPU for the past like year or so, and I tried and I could not find a NVIDIA GPU for a reasonable price, right? So just to give you an idea, I bought a NVIDIA 1660 Ti, and this was back in 2019, for like 270 Canadian dollars after tax. Right, so I think retail is going for around 300, so I got like a little bit of a deal even on that. And yeah, if you were to try and look for like a GTX 1660 Ti on eBay, you'd easily pay like triple the price, right? Not even joking. So yeah, there's no question in my mind that NVIDIA will sell every single GPU that they make for the like foreseeable future, for the next like 2 years, essentially, at least, right? So yeah, I think that it's got like a great future ahead of it, and I just think that because of the macro environment, because of like the whole like stock market pullback and also the crypto market as well, just the entire market kind of being really poopy right now, NVIDIA is not going to do well just for that reason, but that's a good sign, right? There's nothing fundamentally wrong with the company. In fact, it's a great company, and it's a great stock. I just think that this one's kind of an easy money and I don't see that NVIDIA can somehow be lower in terms of valuation than where they are now, like a few years from now, right? Unless we really do enter into like a multi-year long huge recession or huge depression, but I don't think that that's going to happen. So anyways, those are my 5 stock picks for today, as well as some of my thoughts about the macro environment kind of going on right now, or macroeconomic environment going on. So yeah, if you enjoyed the video, be sure to hit the like button, and yeah, consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram, links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye-bye.